Hello, everyone. It's the end of the first quarter, and this is the Lunar Capital Quarterly and Investment Performance Review. Today, I'm going to take you through, firstly, why we established Lunar Capital. Secondly, the performance of our funds, how we invest, and then lastly, why you should consider Lunar Capital for your investments if you're not already invested with Lunar Capital. We always start with this slide. We are a regulated company, so we have to provide these disclosures. We're regulated by the Financial Services Conduct Authority in South Africa. So not a fly-by-night business. Okay, so let's start with why we established Lunar Capital. So we basically saw three kind of core issues, when we started, Lunar Capital in 2015 and eventually got registered in 2016. Firstly, the historical exclusion, of education, in terms of investments and the importance of investments by most of the previously disadvantaged people in the country. Secondly, we also saw lots of scams, a lot of aversion towards investing. People kind of wanting to spend their money now, not thinking about the future, or always worried that they're going to lose their money because of the number of scams available. And then lastly, sometimes many people wanted to invest, but actually they lacked the wherewithal, or they just don't get down to doing it, or they just don't fill in the forms. So how we kind of try to address that is basically by being evangelist, for investing. So we do that. We write a weekly stock take, that we produce, on a Tuesday or Wednesday every single week, where we talk about a particular stock, or we talk about an investment theme, or something that we think may be of interest. It's short, it's sharp, it's probably a 2 to 3 minute read, but it also gives you some nice statistics about what's happening in the markets. Secondly, we've written many blogs on investing. We do this quarterly investment review, and there too we kind of provide some insight as on our strategy, our investment strategy, where we are invested in, and people can use that to provide input into their own investment decisions. Okay. And then lastly, we're also very happy to do private consultations to talk you through how the funds are performing. And certainly with a number of our large clients, we do that on a 6 monthly basis anyway, where we chat to them about their investments, why we've invested the way that it is, how we've performed, etc. And it's personalized, it's face to face, or it's over Teams or something like that. So that's one of the things that we do. The second big issue that we found, was firstly people were not invested offshore. So people were scared of investing offshore. When we started in 2015, so people heard about it, they wanted to do it, but they didn't know how to do it. Secondly, many of the large, investment houses had, firstly, their large funds were very index correlated, and then they had a number of funds, which created a level of confusion. So we've tried to keep it very simple by having the Lunar BCI Worldwide Flexible Fund. That fund at the moment is invested about 72% offshore. So immediately, anyone investing in that fund with a minimum of 1,000 rands a month can actually, be invested offshore. Without any of the complexities, that people think there would be in investing offshore. The offshore portfolio management service is another product that allows us to do that. So we keep it simple in terms of what choices people have, to be able to make the decisions, with us. We're not suggesting that always these funds will be appropriate for them, or these services will be appropriate for them, but we certainly believe that they should be considered, and if it's not appropriate, then absolutely they can choose something else that's more appropriate. Thirdly, we found that many clients, particularly sort of not the high net worth individuals, were underserviced by investment managers. Yeah, and we feel that we available there for personalized consultation and guidance, talking about how the investment funds are doing, etc. And then lastly, we don't see the investors with us as being just clients. We actually see them as co-investors. So we ourselves, our directors, our staff, our shareholders are all actually invested in the Lunar BCI Worldwide Flexible Fund, and that basically means that we all have skin in the game. So so we co-investors with our so-called clients, or the investors with us. So those are the reasons we set it up, and this is how we've tried to address that. So let's talk a little bit about how the funds have performed, right? So to the end of March 2024, basically our 1-year return was 33 odd percent versus the JSE, which actually gave a negative return of 2%, the NASDAQ a return of 34%, which was commendable, the MSCI World Index at 21%, the ZAR depreciated by 8.6%, over the year. And then, if we just look at some of the, our performance or historically, 1 year is 1 year, but really, one should look at the longer term investments as well, and how long we've been around. So we've been around, for over 7 years, and our 7-year track record is 116% over that period, giving 11.3% return over that, per annum over the period. 5 years 84%, 3 years 36%, and you can see the annualized returns there, 13.04% over 5 years, and 10.71 over the 3-year period. Now, in all of these categories, we are in the top quartile of the worldwide flexible funds, and actually, if you take the very long term, if you take the 7-year period, we are actually in the top 10%. Top 10%. Okay, so of all of these funds, and I did a quick analysis there. When these statistics come out from MoneyMate. So in other words, it's not, we haven't made these things up. They come from a reputable organization called MoneyMate. And I looked at our funds performance over the 7-year period versus all the other funds that have been in existence over that 7-year period. And we are number 71 out of 934 funds. So basically, it means that we are in the top 10% of all funds in South Africa. So that's not too bad, not too shabby, certainly, for a startup organization, like ours, versus all the big, the institutional investors and all the other funds, that are available out there. So how do we do that, right? So we have a simple philosophy, and we've held on to this, for over the long period. Absolutely, we've honed it a little bit, but the core of our philosophy is very, very similar to what it was, when we started. We see ourselves as owners of quality businesses with high growth potential and significant competitive advantages. So what does that mean, right? So it sounds glib, it sounds kind of cliched. But we look for, what is a quality business? A quality business must have good management, must have a good revenue track record, must have good margins, must have a good return on equity, must be positively cash flowed. So these are some of the things that we look for, and we study those businesses to get to that. What gives a business high growth potential? Okay, so we see that and say, how can a business grow faster than average? So what will make that grow faster than average? So typically we look for, what trends are out there in the market that can give that business, the opportunity to grow faster. And then lastly, what gives it a competitive advantage? So in other words, can a competitor quickly come and take over that business? What particularly, is it their brand? Is it the complexity of the technology? Is it the quality of their service or their products? So we look at those things, to try and find those gems that we are invested in. So the process that we follow to do that is, we basically start with saying, what are some of the mega trends that are taking place out there, right? So in other words, what trends, will provide faster than average growth, right? So obviously, for example, technology is a big player, right, in terms of trend, right? I mean, the innovation that's taking place in technology, not only in information or IT technology, but certainly in energy technology, in biotechnology, etc., right? So all of these things are playing significantly, to how a particular business that either creates that technology or provides that technology for other businesses to grow, or those businesses we think will do well. So we look for those and aging populations, technology, biotech, biotech uh, innovations, the demand for energy, generational change, right, can also create, certain trends that drive out, these mega trends. Then we look at the specific businesses, and as I mentioned earlier, we look at the quality, the underlying quality of their business, right? Their earnings, their revenue growth, their potential for revenue growth, their margins. Is it a high margin business? Can they withstand, suddenly somebody trying to come in, and take their business? Can they, for example, survive interest rate increases? So what level of debt do they have, etc.? What moats do they have to protect their business, from competitors? And lastly, we also always look at the other side, so what can go wrong in that business? And to understand what can go well is important, but to understand the risks of that business is also important, and how they could mitigate that. Or is it potentially too high for them to overcome if certain things happen? So we try to understand that. Then what we do is we basically overlay all of those things with basically asset allocation guidelines, right? So in other words, how do we want to allocate that? And we also consider some, overall macro kind of environment, right? So in other words, what's happening geopolitically, what's happening, in terms of interest rates and inflation, what is the market sentiment like? So remember, in as much as underlying quality of a business and its earnings potential give you the ability to value a business, but sometimes market sentiment can be high or low, and that gives you either, if the market sentiment is good, you could be overpaying, for example, for some of these businesses. And similarly, when everything is kind of looking gray and dark, then that could be really good opportunities to buy, because valuations could be low. So we look at all of these things, right? Elections taking place, etc. And then finally, we construct a portfolio around that, and we tend not to change too much around that. So of course we look at it on a regular basis, and we make the adjustments. Sometimes we might move out of a particular sector. Sometimes we want to take a bit more offshore. Sometimes we say let's hold on a little bit, because we want to take less offshore, or we want to ramp up, for example, investments in another sector. So we take that and we create that environment. So, what is our outlook, right? So our outlook basically is we think that, which has been there for a while, interest rates higher for longer. We've seen that playing out right now, right? We think overall that the long-term prognosis for artificial intelligence is very good. So we see that the demand, for AI type products, technologies, and certainly companies that are going to use that, for their advantage, will probably be, very good investments in the longer term. For example, in the biotech space, the ability to identify new treatments using AI technology, I think, may speed up certain developments, certain treatment, developments. We think the demand, for energy and materials required to service these, supercomputers, providing AI technologies and AI processes, will be high. Elections will play negatively, positively, depending on its outcome, depending on the geography. And certainly we've seen some geographical and sector rotation taking place at the moment, and a lot of geopolitical risk, in terms of what's happening in the Middle East, what's happening in Russia, Ukraine, and in other parts of the world as well, including, for example, the trade wars that the US is having with China. So if you look at how we positioned, given all of these things, the mega trends that we look at, the macro environment, we still see IT as an area for growth. And we continue to see that. We have toned it down, from where we had approximately a 40% allocation. So the orange line shows you the allocation in the fund, in the Lunar BCI Worldwide Flexible Fund. The blue line shows you the allocation in our offshore portfolios. So previously we had about a 40% allocation to technology. We've toned it down a little bit, taking some profits, particularly in the semiconductor space, but we still see, some opportunities there. The second largest area of investments in terms of sector is basically in the biotech space. Where we think that there's significant opportunities for growth in that particular area. Similarly, in the financial and in the investment space, we see some opportunities in retail as well. So the other important thing in this graph is that if you take the cash and the fixed income kind of together, fixed income and cash, you see that in the fund and in the offshore portfolios, we are approximately 25% in cash and bonds, okay, or cash and fixed income. That basically says that we are a little bit risk averse in this market, seeing potential opportunities for us, to acquire businesses at cheaper levels, if and when there is that downturn, in the markets. So that basically gives you an indication of how, we present. So relatively diversified, a little bit more, overall in technology, which is a sector that we always like, and biotechnology and the financial services area, and then, a bit more in resources, and energy, and in the retail space. So if you take, for example, our top 10 holdings, our largest holding in the fund is in Berkshire Hathaway, which is a bit of an energy play, a defensive play. In technology, we've got ASML, the makers of these machines that that print the lithography on computer chips. Say ASML, Nvidia, the designer of these these chips, and real superstar in our portfolio since we bought it late 2022, before the AI hype kind of came about. So we benefited from that quite significantly, giving us multiple returns on our overall investments. Microsoft, the doyen of the computer industry, and really running that business incredibly well, let's call it their legacy businesses, providing good cash flow, cash cow kind of businesses, but also great investments in newer technologies, particularly in the AI space, in the gaming area. So, really a business that we think is going to do well. Amazon, playing both in the retail as well as in the technology sector, so still, good investments in that space. In the biotech space, you see Novo Nordisk and Eli Lilly there, the diabetes, obesity play. And then recently we also took a stake in Roche. You don't see it on this one, but it's there. And then in the retail space, we've got Walmart and Amazon, as I said. And in the financial space, we've got UBS, which is the Swiss bank, doing incredibly well. We bought into it in the Swiss financial crisis. We also like that because it's actually much more of an asset manager, a wealth manager, rather than a bank. So giving us much more stable type of income. So really great investment for us. In JP Morgan, we bought when there was the financial crisis in Silicon Valley. So all of these businesses give you a good sense of the diversity that we've got, but also where we see the growth opportunities and how we try and manage that risk. Okay. So there you go. So this is basically, if you want to, invest with us, if you're not invested with us already, there you go. There's our contact details. Follow us, on Lunar Capital. You can subscribe to our newsletters. You can contact us if you want a, consultation. The two products that we've got, is the Lunar BCI Worldwide Flexible Fund, minimum debit order of 1,000 rands a month, or a lump sum investment of 10,000 rand. And then the direct portfolio investments, of 500,000 rand. We're happy to talk you through that. You can see some information on our website. You can even get our minimum disclosure documents on our website showing the costs related to the fund, the historical performance, the risks that we take, etc. So there you go. Have a look at that. And at the end of the day, what we're saying is that if you're looking for offshore exposure, if you're looking for a business that has a 7-year track record in the top 10% of all funds in South Africa, consider Lunar Capital. And remember, we have skin in the game. So there you go. And we're happy to talk to you face to face, over Teams, and give you that personalized service. So thank you. Here's our contact details. Thank you.